Hello everyone and welcome back to a new video on the Online Bread channel where we discuss everything stock market related to my portfolios and the news that's going on. But before we get into today's video, if you could please hit the like button, subscribe down below if you haven't already. So you stay tuned with updates on my portfolio and everything that's going on in the stock market, and turn the notifications on so you don't miss a future upload. And in today's video, I am going to be explaining what I'm investing in 2023, and yeah, what my portfolio currently looks like. Updates since the last video I made with the banks going down. We had Silicon Valley Bank, we had Credit Suisse, and a couple of other American banks, and a couple of other banks in Europe as well. It has kind of created like a ripple effect, and what I think's happened, and what a lot of other people think that has happened, is that people have sort of seen that one bank's gone down, okay, bank run, which are now obviously being bailed out, because if the Fed didn't bail them out, of course, it's going to be horrible for us general day-to-day people, right? Because inflation is going to go ridiculous, even more so, which means cost of living is going to go up even more, especially in the US, where these banks have been affected, and in certain places in Europe where these certain banks have been affected. And yeah, the Fed's bailing them out. So more money printing, which is good for one reason and one reason only, because we know what happened the last time that the Feds printed money in the virus era, should we say, where, all the markets were going up because people had this money, people were getting government grants, and just the whole markets went crazy because, if you were sat at home, you got your $1,400 a month check, people were buying things on Amazon. People got furloughed, spending more time at home, spending more time online. All of these stocks went up. The entire stock market, the S&P 500 went up, and lots of individual stocks as well. So with that being said, let's jump into this video. Okay, so what is going on in the stock market? Well, as you can see, my portfolio is currently down about £1,060 or 2.66%. If you take a look over the last month, we were down about 3.76%. So it is starting to recover. And take a look at the last week here. You can see that, again, this is when we had that massive dip, and we have started to recover since then, and I have been adding some more money. So this is my ISA portfolio. If you guys are in the US and you didn't know, and stocks and shares ISA over here, it's called an individual savings account, and essentially what it is the government allow you to invest £20,000 a year into stocks, and all the gains that you make are tax-free. Of course, I've lost money here right now, but this is only my second year investing. I'm going to continue to add 20K to this portfolio for as long as I possibly can. I'm actually moving brokers this year, and I'll touch on that in a bit here as well. But yeah, so that is what's currently going on, okay? The Fed are bailing out the banks that obviously had a bank run, and again, it's created a ripple effect. So will something like this happen in the UK? Only time will tell. Maybe, who knows at this point. Probably, this will probably go on for a while. There'll be some more banks that disappear this year for sure. Which of those are they? I don't know. Where to keep your money safe right now? In my opinion, again, I'm not a financial advisor. I'm 21 years old in the UK. I own a few businesses. I'm able to invest. So don't come to me for financial advice, right? I'm not the person to give you that advice. But in my opinion, some of the best things to hold right now are gold and Bitcoin, because Bitcoin and gold, they're stores of value. No bank going down will affect that money that you have in those accounts. Okay, the banks can't touch your gold, the banks can't touch your Bitcoin. You're good to go. But of course, that's risky, right? It could go massively down. Bitcoin is up massively. If we go over to CoinGecko here, which is a cryptocurrency tracking website, you can see Bitcoin is currently sat at $28,000 almost. Which has gone up dramatically over the last 2 weeks since this whole sort of debacle happened. Over the last 30 days, as you can see, it has rallied all the way up to $28,000. And if we take a look at an all-time high chart, you can see that we have had this massive spike up here. So Bitcoin's one place to hold, gold another place to hold, and potentially just kind of storing cash. But again, I don't want to freak anyone out. This is just if you're really, really conscious. I still have quite a bit of money in the bank, which I've got ready for the next tax year for the ISA, which will be going straight into the stock account on April 5th, I believe it is. Let me check here. April 6th. There you go. Okay, so you're able to deposit 20K a year in the ISA. So how is the ISA doing? No more waffle. Let's get into it. So you can see, also a gold ETF may be good as well to hold your money. But iShares Global Clean Energy. You can see if we take a look at the last month, is down 4.58%. Global Water down 4.45%. Physical gold is up 5.9% because of what I mentioned. People are looking at gold as a store of value right now, which I do not blame them. As you can see, this is currently at its all-time high. And the price of gold itself, I do own some physical gold that sat in a vault in Singapore. That has also gone up quite a bit. FTSE 100, as you can see over the last month, is down 6.6%. As you can see, a lot of these stocks are starting, or a lot of these ETFs, are starting to recover now, which is good. The All World here, the FTSE All World is down 3.24%. Okay, All World dividend yield down 5.81% there. The Vanguard FTSE Emerging Market is down 4.65, and the S&P 500 down 2.35. So where am I allocating funds at the moment? Well, if we go to holdings, you can see nothing's really changed here. We've got 50% to the S&P, because again, this is the total stock market. We've got FTSE All World of 15%, which is not balanced because I only added this a couple of weeks ago. We've got the FTSE 100 at 10%, iShares Global Clean Energy at 5%, Vanguard FTSE All World dividend yield 5%, physical gold 5%, emerging markets 5%, which again is not balanced right now. If I rebalance this, it would sell £1,500 of Global Clean Energy, £77 of FTSE 100, 34 S&P, £600 of the All World. I think this is the dividend yield. Yep. £180 of gold. FTSE emerging markets would sell 2.1k, and global water 726. Sorry, it's early morning. Didn't get much sleep last night. And it will buy 5k worth of the All World, which I don't really want to do right now in this market. So I'm just kind of holding how we are. And that is the portfolio. So what am I doing in the current year then? Well, in the ISA, nothing is really going to change. 20k will be added into here for a total of 60 this year, which, will bring us up to about 60k in this account, which is nice. This is a nice kind of savings account, if you like. It's called an individual savings account, right? That grows sort of on average 7% a year. This year might be a bit lower. But yeah, the top that we were up was about, I think we were up we were up 4.32% at one point, which is nice. So yeah, that is the current portfolio. We have gained £253 in dividends. This is investing in this. This is not a dividends tailored portfolio. Although we do have the All World High dividend yield in here, it's not really a dividend portfolio. I mean, I think we make like £100 a year on the S&P, maybe £60 a year on the rest of them, something like that on the ones that pay dividends. So nothing crazy here for dividends. But again, this isn't a dividend focused portfolio. And I have edited this target to 80k. So if we go over to the dividend account, which is my single stocks account, which has also been hit very hard, I will kind of explain why I'm going to be investing in on this account here. Okay, now as you can see, over the last month, we have started to recover slightly. We went down to about minus 5.4%, and now we're slowly starting to recover. Okay, so as you can see, a lot of these stocks are massively down where I was in the green. This Annaly Capital Management has been very underwhelming, if I'm being honest. I mean, to be honest, they are a capital manager of investment strategies across mortgage finance, which is banking. So, I mean, I'm not really surprised that they're down this much, to be honest. It's quite annoying. You can see they had this massive crash here, though, and then rebounded. So, I don't know. I'm going to keep hold of it. I'm not going to sell at an 18% loss. Apple Hospitality REIT, again, I'm going to continue to buy because it's just a great dividend REIT. AT&T here. We've got Barclays, which again is a bank which has obviously been affected here. BCE has been affected. BHP, I was up almost like £300 on this, which is down. BP stock is down as well. British American Tobacco, Broadcom is up, hasn't really been affected whatsoever. Charles Schwab, obviously massively down. Coca-Cola, Ellington Finance, which again is another REIT, which is down 21%. We have EPR Properties here down, which I only have about 50 quid in there, so nothing crazy. Global Water Resources, Horizon down, Imperial Brands down, Intel down. Physical gold again has kind of been, very just kind of the same, if not up. JP Morgan obviously down. Lloyd's did get affected, but not too much, and I'm still up on that. LTC Properties, McDonald's, Oxford Lane Capital, Pembia Pipeline, Prospect Capital, Realty Income down. Realty Income, I think I'm going to continue to buy. This is my largest single stock position, and I'm going to continue to buy more of this because you're essentially investing in um, single unit freestanding commercial properties. So this is a REIT that work in commercial properties. So they're renting out their spaces like office spaces, etc., to businesses that pay a almost 5% dividend yield, and that is distributed every single month. So I want to have a very, very large holding, high five figures in here eventually. So that is part of my real estate diversification, which I'm going to get into more in a second here. We have Rio Tinto up, Shore Capital, Stag Industrial, Unilever, which hasn't really been affected too much here. I don't think anyway. Okay, down 3%. We have this dividend yield and the S&P. So yeah, everything is kind of down. However, we are starting to recover here. If we have a look at the last week, we were down, about 5.53%, and we're slowly recovering there, which is nice to see. So what am I going to be doing for the rest of this year? Well, I've kind of not changed my perspective, but I want to adapt because yes, I want to continue adding to my dividend stock portfolio, and I will do. But personally, I just think the best thing to do is buy and hold the total stock market. If you want to play dividends, play with a dividend ETF, and that is probably the best that you can do, to be honest, instead of trying to pick stocks. And I'm not just saying this because I'm down. I mean, if you go to my maximum time frame, I mean, guys, I lost like 50% of my portfolio at one point. I know it was only like £500 when I was just starting out and playing around, but yeah, I don't really know. I haven't really decided too much yet in terms of what I'm going to be buying this year. There's currently 21.7k in this portfolio. I'm going to continue to add to this, especially a Realty Income and monthly dividend stocks. I'm looking for monthly cash flow versus quarterly, because if you think about it, right, these companies, let's take AT&T for example. They pay a 6.12% dividend yield, right? But they pay this every quarter. However, they take money from people that use AT&T every single month, and they're only paying us every quarter. So the difference between those like 3 months is tremendous profit for them. So, and of course that's how business works, but I don't know if I want quarterly dividends. I want monthly cash flow. That's why I've been looking into real estate more, but at the same time, right now is not a good time to invest in real estate, buy to let. So I've been looking at things like crowdfunding investing, and I'm not recommending these. I don't really know too much about them just yet, but you've got like these where you can fund this. Okay, a few people come to fund this, and they give you an 8.5% return on investment per year, and that is distributed monthly. Or there is you've got things like 7.8% a year in rental income and stuff like that, right? So this is like for 15 months, 8.5% a year. So yeah, I don't know in terms of that, because a lot of these are minimum investments, kind of like 5-10k, which I'm fine with if it's a legit company. So I need to look more into that. But yeah, I'm looking into more realistic opportunities without going and buying a house directly for buy to let, because again, that is just not profitable right now, especially around the south of the UK where I am located near London. It's just not very viable right now in this market. The interest rates are crazy. You're not looking at much profit whatsoever. And the moment the rent prices are so high, yet that won't cover a new mortgage going out because of the interest rates on the bank unless you lock that in a year or so ago. So that is what I'm investing in for the rest of the year. I want to look at more real estate stuff. There is something like Lofty AI, which is a cryptocurrency on the Algorand blockchain, which allows you to buy shares of a house for as little as $50, and they pay rent every single day. And is all legit, whatever. I have about $1,000 in there right now just testing it, so I may transfer some more into there. You're getting around 7% a year cash on cash, which isn't too bad. So I'm looking at things like that, but I haven't yet decided what I'm going to be doing. But primarily it's going to be ETFs, Realty Income, and some other dividend stocks. When these start to recover, I may sell out of some of these. And yeah, guys, in real estate, that is primarily what I'm looking at buying, and probably some more gold, and especially more Bitcoin and cryptocurrency overall. One of my companies is in crypto, so it makes sense for me to own crypto because I know somewhat about that market. But yeah, guys, thanks for watching. I hope you enjoyed. Subscribe if you're new. Hope this was helpful. Let me know what you're doing for the rest of the year. Oh, and because I'm going to hit the 85k threshold for this portfolio in the next couple of months, I am going to open a Vanguard account. for my ETFs, and also I'm going to open an ISA ready for. Sorry, I've already got an ISA open ready for the next financial year. So a year from now, I'll start using um, Vanguard for my ISA, but also I'm going to use Vanguard for my just general investing with funds, and then also I may transfer my SIP, my self-invested pension, over to Vanguard. I haven't yet decided on that yet though. But thank you for watching. I hope you enjoyed. Subscribe if you're new, and I'll see you on the next one. Goodbye.